Hi guys, how are you? My this one titanium. We're gonna do a video on charting. We're gonna start with the real basics in this video. I'm going to rant probably a little bit because I have to. I have to get some of your brains aligned properly in order for you to be able to receive what I'm about to tell you. Um, what does MMT have to do with charting? Well, it has a lot to do with it. Why? Because MMT is macroeconomics, right? And that is something that applies long term on the big picture. And if there's anything that you're going to learn from me, is Occam's razor. That means that you are going to simplify things as much as possible, and you're also going to be as macro as possible, okay? And you're going to always be ready to be wrong. Um, and you're going to go with what's more likely to happen than not. What's more likely to happen. Very important, okay? Um, I'll give you a short story. I was in Greece in 2009. I joined my national carrier, Olympic Air. Everything was fine. Joined it a couple months later. I turn on the news and I hear austerity. Now, I know what austerity means. So, packed up my bags, moved my family back to the Middle East. Okay. And sure enough, the company shrank and it got bought over. And all those pilots that stayed there and didn't listen to me were looking for jobs. It was a disaster. The country was a disaster, as you all know. Now, bravo to me. I understood macroeconomics. I understood austerity. I did the right thing in my real life. But in trading, I went out and shorted the euro. And I lost my ass. And I couldn't figure out why the hell am I losing my ass. Okay? Productive output is going to collapse. Why is the euro going up? I couldn't understand it. And that's when I realized the importance of charting. Just because I have a good understanding of the macroeconomics and it was playing out exactly the way, in real life as I expected, the euro kept going up, and I'm like, what the fuck? Okay? It took years before the euro went from 160 down to 103. Years. Okay? So, what's the learning lesson? The learning lesson is that you have to take two completely different points of view to understand something that is going on in reality. Okay? And ever since then, I honed in on my charting skills and reduced everything. I applied the same rules I did to macroeconomics, just reduce everything, make it as simple as possible, as macro as possible, and then be ready for what's likely to happen next, and then act accordingly with the least amount of risk and the maximum amount of reward. So let's get started. The first thing you need to know is that charting is like fractals. Okay? It's something that is repetitive over and over and over again. It is your ability to be able to recognize what is going on, what structure it's forming, what fractal it's doing, what stage is it at in any time frame, any chart, doesn't matter. Okay, for you to be able to train your eyes and train your brain, the basal ganglia, it's the portion of the brain that forms habits. Okay, and once you train your eyes to know what you're looking at, okay, and you have the patience and you wait for price to do what it's supposed to do, and then when you understand it, take the least amount of risk for the maximum amount of return, then your charting is going to improve immensely. Now, unlike websites and unlike gimmicky books that are designed to bullshit you, okay, and come up with these stupid moving averages and isolators and bots and all this nonsense, the only reason people like this stuff is because they don't want to take a responsibility for losing their money, and it gives them a false sense of security. It's what the indicators are saying. It's not what I'm saying, but I'm going to make money because I put all these ADXs and RSIs and MACDs and standard deviations and Bollinger Bands and Fibonacci. God, you know, the Fibonacci 61.8 is throughout the universe. Everybody's got to use it. You know, all that stuff's got to go out the window. You have to clear your mind with this. This is bullshit, okay? And the same goes for the value guys who are going to tell me about Buffett and, you know, the moat and the EBITDA and the enterprise value and the PEG and the PE. And if you buy undervalued companies at a cheap price and this is all bullshit. It's the same gimmicky guys who are selling you RSIs and MACDs who are going to sell you this Benjamin Graham bullshit, okay? Why is it bullshit? Because the biggest companies in the world right now are Amazon, okay? It's Facebook and it's Google, and they don't produce shit. You want to talk to me about Kodak and, you know, how undervalued it was when it was collapsing, and Polaroid, right? They have good management teams. It's a good company. They're going to get into the digital game and they're going to do it better than everybody else. Yeah, okay, sure. I've seen a lot of value traps, and they'll take you all the way down to zero. And they'll be value, you know, all the way to zero. If you get the macroeconomic picture correct and you get the charting correct, you will make money. I don't care what method you want to use. You want to use Bollinger Bands, you want to use RSIs, stochastics, whatever you want, be my guest. Go out. You want to use pegs and enterprise values and moats and bullshit, you're gonna do the same thing. Be my guest. If you get the macro picture right. Because no matter what anybody tells me, I don't care if you have a monkey and you throw, you know, darts at a board with a bunch of stocks, okay? If you go long, you're going to make money. You want to tell me it's value? Go ahead. You want to tell me it's your RSI and the moving averages they haven't crossed in the 50 and the 200? Whatever. This has nothing to do with it. Okay? It's got nothing to do with it. The stock market is going straight up. Therefore, you think your method is going to be the only method, and that's it, and that's what works, and da-da-da-da, and all this bullshit. It's not. It's all about the macro. Okay? When deficits are 10% of GDP, okay, and there's money pouring into the stock market like there's no tomorrow, okay, and the market is coming straight down, guess what? That's going to translate into savings, and those savings are going to go into asset prices like stock, and the stock market will rise. I don't care what you tell me about your enterprise value or your MACD or your Hokomokochuko. Okay? It doesn't matter. It's crap. You have to understand macroeconomics first and foremost. Alright? And as I always say, I am always open source. Okay? Always open source. If you guys, you know, can take the stuff that makes sense to you and go and improve on it, and you can come back and teach me, I'm more than happy. But if you're going to come back to me and say, oh, Nick, guess what? You know, government printing and QE is going hyperinflate the dollar, and I'm going to say, okay, great, show me the data. Well, I don't have it. Well, I don't want to hear it. Okay? It's very simple. So, let's get started with basic charting. We understand it's fractals, and we also understand that price action moves in waves. Now, this is not Elliott waves. I told a guy, you know, look, it works in waves and so on and this and that. He's like, oh, yeah, great. And then he ran off and started reading some Elliott wave books and started analyzing every single little tick. Everything had a meaning. And they had an A and a B and a C and a 1 and a 2 and a 3 and a 4 and a 5 and a X, Y, Z and W and L and a P. And he's coming up with all these determinations based on some bullshit. Why doesn't an Elliott wave work? I'll tell you why it doesn't work. Because nobody knows how to do it. And when they do it, they're trying to force some preconceived idea in some textbook of how it's supposed to work. And they say, okay, this is a 1 or 2. No. Believe me, if Elliott wave worked, we would all be doing it. It doesn't work. Okay? So you need to get that bullshit out of your head. All right? Don't tell me about gains charting and all this nonsense. I don't want to hear about that. The hardest thing to teach is someone that thinks they know how to trade. It's the hardest thing. It's frustrating. Conversely, it's difficult for guys who don't understand what I'm talking about, and it takes some time for you to understand what I'm doing here. And that's why I started with the first batch of guys, about 30 of them, been with me for about a year, and I started them out with the most basic of things, okay? And that is that the market moves in waves, and it moves into a 1, 2, 3 wave, okay? So I said, okay, it's simple as 1, 2, 3. Why 1, 2, 3? Why is that the importance? And this is where people say, well, look, it's Elliott wave. No, it's not Elliott wave. It's a fundamental fact that price action moves up and down in waves. It's just fundamental. You want to call it Elliott wave, call it whatever you want. I call it Nick wave. Okay? It's just the way it is, right? Otherwise, you would have a chart of a line if nothing moved. I mean, come on, you know. So don't try to tell me it's Elliott wave. It's not. So the first thing you need to know is that the market moves in a 1, 2, 3. Why? Because it creates 4 points. And these 4 points are going to create a structure. And that structure, okay, is going to look like this, at the bare minimum. Now, it can move up, it can move down, the outcome is the same. It can move sideways, okay, 1, 2, 3. It's always going to be a 1, 2, 3, all right? Occasionally, you will get a 1, 2, 3, 4, 5, okay? It's just, all that means is just, it's a bigger structure. It's more complex. That's it. The 5 waves are typically more complex, and they're more rare. Okay, so how do we analyze a wave? Well, the first thing you need, okay, let's say the price action is doing something like this. Okay, the first thrust move, it's a persistent move in one direction. It could be up, it could be down, doesn't matter. In this case, it's up. The first persistent move up is always going to be wave 1. This is where it all begins, right here. Okay? Then you're going to wait for a pullback of some kind to occur. Okay? Once that pullback occurs, then you're going to look for the next wave up. See, once you have this pattern right here, the 1, the 2, then you're going to look for the 3. See, you never know when 2 is going to end, so never trade a 2. Never, ever, ever trade a 2. You have to know what's going on, so you need a 3. And then once the 3 starts to hook back up, then you can take the trade. Okay? And that's the way, the simplest way I can start training you in understanding waves and structures is that you have the down move, you're going to get the thrust up, the pull back, and then up. Okay? Never trade a 2. Always want to get involved in a 3. Okay, so you can also have sideways 1, 2, 3s where it would look like this. Okay, actually it would look like this because this is going to be the thrust up move, and then you're going to have a 1, 2, and a 3. All right. Now, usually M patterns, okay, they are somewhere that occur. You know, let me redo this. I keep getting messaged. It would happen something like this. If it happens in the middle of nowhere, it's usually a pause. Okay, this is a pause. You can expect this one to continue to the upside. If it happens at the top, okay, all-time highs or something like that, then sorry about that. Then it would be considered a topping pattern. Okay, it could be an M pattern like this, or it can be an M pattern like this. Okay, but usually this is the more common one. All right. So that's a flat 1, 2, 3. Okay, 1, 2, 3. Right, 4 points. Always looking for those 4 points to connect. All right, and if the thrust up move is coming from the bottom, then you should expect it to go to the upside. Okay, if it's coming from the top, and then you get a 1, 2, 3, then you can expect it to continue to the downside. All right. The thrust move is always going to be the anchor point where everything begins. And it's always going to be the first counter move. So this would be a 1. Okay? because I didn't draw that correctly. Let me redo that again. So it comes down, first counter move, this is going to be a 1, because it's going to kind of look like this. It's going to be a 1, alright, and then this is going to be a 2, and then it's going to be a 3. If this is a flat, alright, then you can expect it to go to the downside. Alright, I hope I didn't confuse anybody there. So let's run this one more time. So you can get a down, first counter move, get something like this. Alright, this is a flag. It's a 1, 2, 3. It's the first counter move. 1, 2, 3, and then down. Or if it's coming from the bottom, then it starts doing this. Okay, then again it's the same thing, expect to the upside. Now it is important in M patterns, okay, that you see how it tests the previous low. It can either break it and then bounce, okay, or it can do one of these jobs, almost come towards the bottom and then continue up. Alright, so it will be a counter trend move, alright, and then that again resolves to the downside. Whichever way the flag is pointing, more likely than not, if the move is downwards, it's going to resolve to the downside. If on the other hand it's doing the opposite, going to the upside, okay, comes up, pulls back, comes up, makes a lower low, okay, then comes down, breaks the previous low, and then you get this structure right in here, 1, 2, 3 fully formed. Then you can expect the next move to be to the upside, okay, and then this becomes a 1, 2, 3, but it's a 1, this all becomes a 2, and then this becomes a 3, right? Fairly simple. So let's take a look at a chart here. Let's go on a monthly. We'll do the S&P 500. Alright, so let's take a look at it. Now this goes back to 1971. It's a very long chart. So what did you get? You got the thrust up move. You got 1, 2, 3. Broke the previous low. Okay, see it right in here. And then did what? It bounced. Alright, very simple to see. And now we're off to the races. We have our correction right in here. Okay, it's a counter trend move. Which way is it going to resolve? To the upside. Off it went. Now, let's take a look at something else. Let's take a look at Bitcoin. Where is Bitcoin? Here's Bitcoin. Now, I love Bitcoin because I think it moves very nicely, very clean, and I'm going to put all the drawings on, and voila. See, when you look at this, you're going, no, it's going up. But then when you do this, then everything starts to make sense. So, again, it was flat over, let's see. It was flat over here, and then it started the wave up. 1, 2, 3, 4, and 5. Remember, something always happens at 5. Instead of falling apart, it actually broke out. Okay, so it was an ending pattern. Went all the way to the top. Wave 5 finished, and once it started to hulk over, we started to become bearish, and the rest you guys know if you follow me. All the analysis that I did on it. So let's take a look at this chart. First we were looking at this, and it was rising. This is the breakout point, by the way, and at the breakout point you had where is it? There it is. You had a breakout, a pullback. Look how it pulled back. 1, 2, 3. Okay, you had the pullback. It tested previous support where it broke out from, and then off it went. Okay, off it went. Then we got a 1, 2, 3. Sorry, it's a 1. Yeah, 1, 2, 3 up, 4, and then this broke. It was just getting tighter and tighter, and then it broke. Okay. Once it broke to the upside, Okay, we say it can never violate back into a structure. So what did it do? It came back and violated the structure. The moment it violated the structure, the whole thing was all screwed up. All right. So then we got the move down, and everything just fell apart. As you can see, we broke previous lows. All right. Came close to testing the bigger structure back here. It came very close. All right. It didn't quite make it. And what did it do? It bounced. And that's why I said you should buy in here. And we're down here because it broke the once it breaks the previous lows and it starts reversing, then pretty much it's going to show another push higher. Now once it started to bounce, it started to create another 1, 2, 3 pattern, right? Which is a 1, it's a 2, and it's a 3. Now if you connect the dots, what are you going to see? You're going to see a rising wedge. Now this didn't exist, okay? Nor did this. So you can just forget about these things. So we had a 1, 2, 3 up, broke the previous high, and then did what? Boom. 1, 2, 3 down. You see? Everything moves in threes. If you can start to understand this 1, 2, 3, you're going to start to train your eye how to recognize charting properly. So let's continue now. This is what's happened since. Now, once you get the hook over, okay, then you're going to need to start drawing trend lines. So when this started to hook over and started to go 1, 2, 3 down, now you can draw this line. Okay. Now remember, this part doesn't exist so far. Okay, so you can just look at it like this. Okay, so this is the way it looked at the moment, at the time. Right, 1, 2, 3 up, and then it broke down. So now you can anchor these 2 points right in here. All right, and you can anchor these 2 points down here. So now you start getting this wedge. Once you get the wedge, it came down again, did a higher low, and then started to do what? It formed another structure. So you got the 1, 2, 3 up, then you got the structure 1, 2, 3 down, and then you went 1, 2 higher low, okay, and then off it went. So then this structure broke, 1, 2, 3 up, and then it paused, 1, 2, 3 sorry, this is part of the same, 1, 2, 3, broke the previous low again, okay, and this is what I said, it's testing the structure, this whole structure right in here, it's testing it. So this is a psych play. This was bullish, and then you would get the 1, 2, 3, and then off it goes. All right. Now, what is the least risk reward? Well, the least risk and maximum reward would have been down here somewhere. Okay, because it broke the previous low, and it had a violent move back up. All right. So that went up 1, 2, 3. Very good. Excellent. Then this one, you can't really say that this is a good risk reward because it's out in the middle of nowhere. All right, it's not. This should have resulted like this to the downside. This is what it should have done. Let me move the chart around. This should have been a bigger 1, 2, 3 down, and this would have been a perfect place to buy it to the long side. It didn't do that. Fine. There's nothing to do in here. This is just noise, and that's what I mean. You have to be patient. And you have to know when to take the trade and when not to take the trade. So we had the structure in play, very clean. So long as it remains in the structure, we have to assume that it's going to go down. It didn't do that. It broke out. Now, as soon as it broke out, I came out with the video and I said, up, relax, don't. Just because it crossed the trend line doesn't mean that, hey, we're good to go. What you want to see is some kind of consolidation that would build like this, and then you can take it to the long side. Okay, even if you would have bought in here, which is fine, as long as it doesn't come back into structure, and that's why I have the stop here, right? As long as it doesn't come back into structure, you're good to go to the upside, even if it's going against you, because this is bullish. All right. So if you didn't buy in here, then you can buy as soon as it breaks the structure. And as you can see, as soon as it broke the structure, We had a nice thrust up move, which was equivalent to about almost $2,000. All right. If you were more of a daredevil and you bought somewhere in here, well, guess what? You made almost $3,000. All right. Now everybody's saying, "Oh yeah, there it goes again. It's going back up." Well, doesn't quite work like that, because we do have these points back here that we connected. So now, we broke the previous high, right? And you can see as it came to the previous high, it started to consolidate and then consolidate here and then finally broke out. Now, the closer it starts getting to this top of the trend line, the more likely it is that it's going to roll over. All right. If it comes to the top of the trend line, it starts building pressure. Okay, something like this, just like it did here. Okay, then and it breaks out again. This is a great risk reward. Buy it, take it to the top, and this is the top, right? Even when it gets up here, and you want to take this small little trade here, maybe it goes a little bit more. If it breaks the top, then it's going to roll over and come back down. So it's not like you're out of the woods. You just have to pick your points, right? Good entries, good risk rewards, and that's what this charting is all about. Now, Bitcoin has no fundamentals, no macro, no nothing. It's just crap. But we can still use the bare knuckle charting to make good, sound decisions as to when we should buy and when we should sell. Now, I've developed this over the years, so for me, my basal ganglia, my eyes, they're trained to know what to look for. Okay, I know when to stop. I know when to take the trade. I know when to take profits and so on. That's where you need to get to. All right, you need to get to that point where you can just automatically see it and not even think twice about it and say, "Oh yeah, that's a buy. Oh, that's a stop. Oh yeah, this is a short." It just happens automatically. I can't help myself then, to sit here and say, "Oh, this is a good place to buy in here," based on what? Well, I don't know. It looks good. I think it's going up. I don't care what you think. You have to let the chart tell you what's going on. All right?